Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be about reviews, and these are the names that I have covered in past videos, and I will do a quick review on each of them. Next, I will begin covering these names and review them in upcoming videos. I've put in timestamps, so please use it to skip to the names that interest you. In the video on the 22nd of September, I highlighted the bearish potential in Skechers amid the formation of a head and shoulders top. This continues to be the case. The latest price action over here is a bearish engulfing, which is bearish in nature, and is also due to a rejection at the Ichimoku cloud. I reiterate, a close below this upward sloping neckline currently around 57.5 will complete this bearish pattern that has a textbook target at 38.82, with the 46.02 being a support that can bounce Skechers higher when tested. I last touched on Novo Nordisk, a Danish company, on the 6th of October, and I said that after a pattern completion, in this case a head and shoulders top, it is common to have a correction, and with price action back then overextending below the lower Bollinger over here, I said that there could be 1 to 3 weeks worth of rebound. There was only 1 week worth of rebound, and this was rejected by the neckline before resuming the downside this week. And we can see that throughout this week and last week, upside continues to be rejected by the 20-day simple moving average. I'll stay bearish on Novo Nordisk. The textbook target is at 619.6 with a support at 721.4 that can bounce Novo Nordisk higher when tested. I'll start off my list of new coverage with a big tech name, Meta Platforms, formerly known as Facebook Inc. Signs of downside risk have increased. It declined for 3 consecutive weeks over here, and I believe it is a result of a rejection at the upward sloping resistance trendline. If true, this could be a rising wedge, a bearish pattern, but a bearish outlook can only be confirmed via a breakdown below the upward sloping support trendline. For all we know, Meta could just trend lower, bounce off the support trend line and go higher, and continues to be rejected by the resistance trend line, up down until there is a breakdown. And as I've said before, rising wedges, the breakdowns usually happen deeper into the corner, 70% to 80% into the corner. So if this is true, then the breakdown could happen only towards the May. But of course, an early breakdown is always welcome. And just to note that there is also divergence noted in the RSI. Let me show you the RSI. So the RSI is showing price momentum divergence. What this means is when you compare 2 points on the RSI and the corresponding price action, it tells you that the price over here is higher than the price over here. But based on the RSI, based on the corresponding RSI, comparatively the latest RSI is actually lower. So this tells us that there is divergence. It means the latest price action, the strength in the latest price action does not confirm the previous strength. So this usually tells us that there may be a decline going forward. But as I've said, price action in Meta Platforms could decline but could still bounce off the support trend line. So until this trend line is broken, a bearish outlook is not confirmed. Once this bearish pattern is completed, it suggests a move downward of about $165.74. The next new name that I'll be covering is British American Tobacco. I believe that it has completed a head and shoulders top, a bearish pattern over here on the 18th of August. And the textbook target is at 2,335, but there is a support nearby which is 2,550 that can bounce price action higher when tested. And also, let's not forget, after pattern completions, usually there will be corrections. So if price action were to fall and then reverse, we will take that as a correction until there is invalidation of this bearish pattern via a close above the last high of 2,762. But until that happens, we should stick to a bearish view on British American Tobacco. Another head and shoulders that is forming is in Toyota Motor, a Japanese automaker. The second shoulder over here looks a bit vague, not really well formed, but for now I see it as a head and shoulders top, a bearish pattern. Price action fell below the Ichimoku cloud and has since failed to recover, so downside is preferred. A close below this downward sloping neckline of around 2,403 will complete this bearish pattern, and the textbook target is at 954.4, and there are three firm supports at 2,225.5, 1,593.5, as well as 1,787.5, all of which can bounce Toyota Motor higher when tested. There will be two names from my list that I will no longer be covering in future videos. First one is on dollar yen. Now, just a review. I first covered dollar yen in a video on the 15th of September, and I said that it is about to complete a falling wedge, a bullish pattern. Completion was on the 25th of September, and since then it has rallied to its textbook target of 152. So 100% of the textbook target is met. And in this case for dollar yen, it is a little special because there was no apparent correction after pattern completion, and price action just rallied. This is not common, but it has happened before. I've showed you before in Volkswagen, and this 152 target is reached. This pattern is resolved, so I will be ceasing coverage in dollar yen. Just a little more to add, we can see that price action in the last easily 10 sessions have failed to test the upper Bollinger. So this is a sign that tells me that upside bias is starting to recede. So I will not be surprised to see dollar yen falling going forward. I will also be ceasing coverage on the US government bond 10-year yield because price action is very near its textbook target of 4.3%. I first covered this 10-year yield on the 15th of September as well, and I said that it may be following a bullish pattern, a falling wedge. And price action broke out on the same day as dollar yen, 25th of September. It had a small retracement before rallying. Another correction over here, easily broke above the resistance of 4% and is now reaching about 4.3%. So the high over here was 4.26%. That is close to, or maybe even slightly higher than 90% of the target reach. I will consider this falling wedge pattern to be resolved. As with dollar yen, we can see that price action is starting to diverge from the upper Bollinger. Therefore, I will not be surprised that the 10-year yield goes lower in the coming days. Whether it bounces off the 4% or whether it breaks will determine further direction going forward. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like, please subscribe and hit the notification button for more videos like this.